How are you feeling about the current market backdrop, hitting record high after record high, going into some of these risky events?
I mean, listen, I think that a lot of it is anticipated. So I think if you look at what's happening with the Fed, that's probably the dominant discussion for this week for investors. I think the quarter point rate cut is probably the most telegraphed rate cut maybe in history. And I would say that people are going to key off of that. It's sort of an indication the Fed's going to be accommodative, certainly for the foreseeable future. And that's probably more than anything else going to be driving the markets.
You mean key off of the message that Powell brings after he cuts rates about whether the market can keep going higher?
Well, he's really teed it up as something where we're going to try and do everything we can to extend the recovery or extend the expansion, if you will. And that's an interesting choice of words because we really have never heard that from a Fed chair before. Right, it's usually about inflation and this, dual purpose of the Fed mandate. But we're talking about extending or doing something to inoculate the economy from a potential downturn. That's an interesting concept, and I think that's something new, and the market has digested that.
Doesn't he deserve to get challenged on the rebound in jobs, retail sales, durables, all the things that have come back from that Q1 sort of short-term slowdown?
Well, I think he does, but I think he's also seeing some things, particularly if you saw the GDP numbers for the first quarter. At 2%, that's not exactly a blistering growth rate. And I think, essentially, he's actually gone into the specifics of, like, public policy, where he's saying we're trying to reach people at the edge of the economy.
Repeatedly.
Right. And that's an interesting concept. It's a very populist point of view from a Fed chairman. We've never really heard that before. And so it's interesting to say monetary policy now has moved into the realm of really public policy. And, is that a result of the president, going after him or after the Fed, or is that just actually the way he thinks? I don't know.
Well, I mean, I guess it's different. But if your part of your mandate's maximum employment, that's part of his point, right, is let the economy run as hot as it can while we're in this moment. Well,
he's not really seeing inflation. So I think we can have a debate about whether or not there actually is inflation in the economy. And there are in certain sectors of the economy we've seen inflation. But overall, things are probably in check. And I would also say we look at unemployment as the key headline figure, but you need to look at underemployment. You need to look at lack of wage growth. I mean, there's a bunch of other things in here which would suggest that our traditional measure of unemployment isn't actually an accurate representation of the health of the economy or the health of the jobs market.
So here's what I'm not clear on, and that is how it's widely telegraphed, it's in the market, what the market does next. In other words, is it buy the rumor, sell the fact, one and done, we'll see how it goes, or there's this idea out there that the Powell's only reinforcing his put, and he's going to be there no matter what if things take a turn for the worse, and the market can keep rallying on that point.
Yeah,
which one?
It's hard to say. Our current point of view is that things are going to rally up and through the election or shortly before the election, just as the Fed is just going to be as accommodative as it can be. First of all, if you take a look at global rates, the Fed is still in positive territory. There are a number of countries that are already in negative rate territory. So you've got this strong dollar that acts as a counterbalance in terms of growth. And so the Fed actually has quite a ways to go relative to the rest of the central banks. And then when you take a look at what the other central banks have done in terms of intervention on balance sheet usage, the Fed has a long way to go to maintain the expansion. And I just think the market understands that, whether they choose to use it or not.
The president says it's not fair.
What's that?
The president says it's not fair.
Well, that's a political comment.
The Journal has a nice quote from Clarida in 2016 today. There will be a limit to how far U.S. rates can diverge from global rates without triggering volatility and a much stronger dollar that hurts exports, right?
That's right.
So this is not a new view. We can't be, although Yellen said the U.S. isn't an island. That's the other thing, right?
Well, and we also have the tariff specter, right? So we have this countervailing element on global trade, and it certainly ties into what's happening this week with China, for sure, right? We're going to get a better sense as to what happens as it relates to tariffs, and the Fed can be incredibly accommodative to essentially deal with the fact that you've got some global headwinds as a result of the tariff situation.
What are the expectations right now for the trade talks kicking off in Shanghai? Feels like expectations have been kind of lowered by the president and by Wall Street.
Yeah, I think we had this whole discussion in May around, this built up of expectations and then a disappointment. I think every time that happens, the market sort of says, okay, you're going to have to show me, right? I think that's sort of, the market does that every time it has expectations that are not met. It takes a breather and then it says, okay, show me. And so I think people just be looking for something tangible here this week. I think it's actually a really low bar. I don't know that we're going to get a lot of movement, but I don't think the market's necessarily That would be, if we did get something, I think all of a sudden, we've been talking about this a lot, there's tail risk to the upside, right? You could see a melt up or a massive summer rally in the face of Fed easing and all of a sudden like a surprise accommodation on China trade. I don't think the market is expecting that.
How serious do you think the president was Friday when he suggested what many people already believe is that they're going to wait out the election cycle, the Chinese, that is?
I think that's our base case. Why wouldn't they? First of all, the People's Republic is having its meetings in October, so there's really nothing for them to do ahead of that. And then we get into the U.S. election cycle. Like, why would they really, why would they really go hard at trying to come up with a solution if in, 18 months they could be looking at a whole different regime? I mean, it makes a lot of sense to wait it out. Why wouldn't they? And that's our base case assumption, is that, they'll deal with whatever they have to deal with, and then the president will be on the road for most of the year next year, on his reelection campaign. By the way, it serves his constituents to be tough. And if he has a deal, like, he can't really be beaten up on China. Beating up on China is great political fodder. So why would there be a deal? And I think that's what the market is expecting, right? I mean, it's just, again, I'll also say this. Hard to talk, though, on the rationality spectrum. Right. Every time you think you've got it figured out, certainly with this administration, something happens that you're like, oh, I haven't really thought about that.